Welcome to my morning report analysis videos on Friday 6th of July with me, Richard Perry, market analyst at Hantec Markets. We've got payrolls day today, but in front of that we've actually had the announcement that the US is going to impose these $34 billion worth of tariffs on China. China seemingly is now responding in kind, pretty much dollar for dollar. Now this has been entirely predicted or entirely anticipated by the markets throughout this week, so there's not really any real reaction. You've actually got a fairly risk positive move. You've got euro dollar up, sterling dollar mildly higher, slight bit of uncertainty with how the yen's doing, but the yen's slightly underperforming. Equity markets closed last night in the States higher. Asian markets were higher overnight. But also you can see this risk positive move through the strength in the Aussie and the Kiwi as well. It is payrolls day today, so markets are sort of maybe looking ahead to payrolls as well. But as I said, the dollar has just slipped in its run higher recently, and it's testing that support at 94.17, so watch out for that. Generally speaking, though, there's a lack of direction in front of payrolls. Now, what are we looking at for payrolls? Well, that's this afternoon at 1:30. Not any real data in front of the payrolls report, but payrolls are expected to be 195, again around that 200,000 level. So markets are not really reacting to the headline data. They're looking more at the average hourly earnings, which is expected to tick higher to 2.8%. Unemployment staying around 3.8%. Again, it's expected to sort of remain on its sort of downward trajectory. But average hourly earnings is probably the key to this payrolls report today. So if it's 2.8%, then that's sort of the highs of recent years. 2016, 2017, it reached 2.8 before falling away. If it's above that, that's certainly is a positive signal for the dollar potentially, but more so for rate hikes really, and how the rate hikes then sort of play into the rest of this year really. We had suggestions from the Fed last night, reasonably hawkish, which was pretty much anticipated again by the market. Fed sort of looking at inflation and growth and sort of thinking that it's certainly growth anyway. Worried about the economy running too hot, which again sort of plays into the consistent rate hikes argument that it has. So it certainly doesn't take 4 rate hikes off the table by any means, but the markets was fairly sort of consistent with that, so no real great shakes from those Fed minutes last night. But payrolls today could provide the volatility, certainly around average hourly earnings, but also, obviously we're watching out for the headline if it's a significant miss anyway, or beat. So that takes me to my chart today. Again, another sort of chart that looks at risk appetite is the Aussie yen. Now, I talked about Aussie yen a couple of weeks back, whereby the sort of market had come back towards the support of this trading range that we've been in for the last few months. And that support of the trading range is seemingly holding, and you're seeing sort of an accumulation of positive candles, which is sort of building higher again. But look at these indicators on the momentum. Stochastics accelerating higher. MACD lines bull cross, and it now sort of suggests we're going to be putting pressure on the 82.10 resistance near term. If you break out above that, that completes this sort of base pattern area, and I think would certainly pull us back towards the 82.60 mid-range pivot, but more likely gives you sort of, let's say, you sort of measure that from 82.10 down to 87. You're probably on about maybe 130 pips, maybe 125, 130 pips of upside reaction target. So you'd sort of start to imply maybe 82.30, 82.20 area as your, 83.30, 83.20 as your sort of implied target area. So that would be where you'd be looking out for, I think, in a recovery scenario. But the momentum indicators improving are certainly important, and you've got these run of higher lows on the hourly chart. 82.10 clearly is a basis of resistance near term. And as I said, break out above that and you're looking far more positive. Slightly positive in terms of momentum indicators on the hourly, above 40 on the RSI, pushing towards 65.70, but not decisively bullish yet. Certainly I think a move above 82.10 would imply that that is developing then. So with that in mind, you've got the initial support, today's low, 81.60 area, 81.25 of yesterday's low. So I wish you good luck in your trading today, and I'll speak to you later.